We'll tackle that later on in the show and in other shows as well. For the moment, let's look at stock picking. Bhavin Desai of Motilal Oswal joins us. Bhavin, well, first of all, what's the in-house call? Are you recommending buys?
Hi. We are sitting at a juncture for the market where the pessimism is at its best. The sentimental indicators on the F&O segment are more or less overly pessimistic. So these are the times when you have the risks identifying themselves at a minimum level and the rewards showing themselves as a tad bit or at least in comfortable zone as far as the risk is concerned. So we're not recommending to go ahead and straight out buy, but we are asking our clients to take a very protected approach and try to nibble a bit at these juncture, at least as far as the current
I'm actually asking for the next 24 hours really. Where do you see the index ending, and up until then what are the strategies you are recommending on Nifty?
Right, okay, that is too small a time frame. However, we've got something for everybody. So, see, at this juncture, we're looking at some amount of volatility to continue even in today's trade after this particular range bound move. But broadly, the options are indicating a 56-57 kind of a band for the expiry tomorrow. And as far as the strategies are concerned, we are being very picky in terms of stocks and strategies, and trying to get out of the trades as soon as we find some amount of profits, and trying to restrict our trades basically for the day itself.
Bhavin, is this run on stocks like IRB, HDIL, IVRCL purely on account of short covering, because these stocks have been decimated this series?
That you pointed out exactly the same, Anuj. IVRCL, I'm sure that is chances are because that the stock is going to be unavailable in the F&O segment from July expiry. But these certain sectors like you have a lot of stocks in engineering, you have a lot of stocks in realty. These are some of the sectors which are seeing some bit of slow speed in rolls, and in at least in select stocks, and the stocks are seeing positive price traction. So that way it is correct that some stocks which are heavily loaded with shorts, the chances are that people who might have shorted it at fairly higher levels would rather cut their positions, cover their shorts rather than rolling them forwards into next expiry.
And what about DLF? Because that's a slightly different story, but it's been at multi-month lows now.
Yeah, similar story there as well. I think I haven't seen today's price, but it did see respite in yesterday's trade. And these are some of the bounces that ideally you shouldn't play with. We do not recommend playing pullbacks, especially in these short heavy sectors in the last week of expiry. But they are there, and that is a reality. So you will see these short heavy sectors showing themselves some amount of strength as the shorts cover themselves in this last 2-3 sessions.
Tomorrow before expiry, are you all expecting unusual moves in any specific counters, something that you would watch out for?
We would be keen on looking at few sectors like engineering, PSU banking, especially among the financials, real estate and metals. These are some of the sectors which have seen a lot of shorts during the expiry, and since first signs of shorts, the stocks in the individual sectors have seen a lot of price damage as well. So it will be interesting to see how they behave in the last hour of trade, when you have the last minute people rolling their positions forward.
Bhavin, which stocks may see some rollover pressure in particular? Because while some stocks have seen aggressive rollovers, in general they are slightly lower this time around.
The stock rollovers, as far as yesterday's data is concerned, were trading in line with the 3-month average. That is what we generally resort to in terms of indications of the speed. But as far as the stocks are concerned, I guess there are a couple of sectors. Realty in particular, I guess, is rolling about 3% lower than the 3-month average. That's what yesterday's EOD data suggests. Rest everything is almost in tandem. So we'll have to wait and watch till the end of tomorrow to see exactly what happens. One thing interesting was that yesterday there was a slowdown in rollovers in Nifty futures. So that is that can play a joker in the pack, which is also heavily shorted in this rundown from 5900 to current levels.
Well, we'll leave it at that. Thank you very much for joining us, Bhavin, with those details. We'll take a quick break and take another perspective on the markets, this time from a technical chap. Sahil Kapoor of Edelweiss joins us.